please use the chat room function. And if you prefer to pose questions directly to Chris, use the hands up function. Please keep yourself on mute. It causes a lot of distortion if you don't. Of course, if you want to speak, unmute yourself. But most importantly, please remember to remute yourself when you finish. As always, we will record the presentation for posterity. And Chris is always very generous in allowing us to post his presentation online as well. And I'm sure he'll do the same today. Hope that's all clear. I've been talking about Chris. Most of you know him very well or heard him speak. For those who don't, he's a highly respected economist who's been observing the Russo-British relationship for over 20 years. He was chief strategist at Sberbank CIB and held similar positions at Uralsib Financial Corporation and Alpha Bank. In 2013, he decided to go solo and started the consultancy Macro Advisory, which he represents today. He's very well and received and widely published on Russia and the wider region. Chris, great to see you again. I hope you're refreshed after the summer break. You always say August is sort of a danger month in Russia. I don't think this August has been that different. Also know you're always very sort of clear on a Russian policy of trying to tie the ruble to around 65 to the dollar. Before I started, I had a quick check. I see it's just under 76. And the other day it was 100 to the pound. So that policy not quite working. Chris, delighted to welcome you again. And I think everyone's really interested to hear your update.
Okay, thank you very much, Alf, and good day to everybody. Yes, everything was going so well. You said that you would record these conversations for posterity. Yeah. It's always a dangerous thing for an economist to hear. Obviously, the ruble is very much in everybody's mind, so we'll address that also, and it'll be a big part of the discussion. And just to remind you, as Alf mentioned, the presentation, which I will throw up now in a second, is available from RBCC. So so let me just get that up at stage and make sure I get it in, and hopefully that works. So Alf, you can see that presentation, can you?
Not yet. James?
I can't either. Chris, if you go to the bar, there should be a green share screen button.
Ah, that's the bit I forgot. It's the green share. Okay, let me just get that. Sorry about that, everybody. It's share screen. Yes, of course. We're so used to different presentations at this stage. Is it up now?
It's still not here yet. Sorry, Chris.
Oh my goodness. Sorry about that. Just so share, and now I think we are.
Yep. Now it's
working.
Sorry,
it's that sneaky button that says share that I forgot to press. Okay, so moving on. And as I've mentioned, the summer, it's obviously been I guess quite a messy 6 months for lots of people, and dealing with COVID. But the one point that we can make is that it is relatively good in Russia. Certainly when you look at what's happening in the rest of the world, the extent of the economic collapse that we've seen, for example, in the UK, but not just the UK, in other countries around the world, it has been much less bad in Russia, and the recovery from Russia is happening at a faster pace. Now, I definitely always have arguments with people say I'm being too optimistic, or some people even say I'm being too pessimistic. We absolutely position ourselves as being pragmatic. So this is not a presentation to say that everything is wonderful in Russia and that we're going to see strong growth and it's going to emerge from this crisis, as a very strong and vibrant economy. That is not what we're saying, and there really is no basis to say that. We're simply saying is that Russia went into the COVID plus oil price. Remember, at the same time, it was a double whammy, same as we had in 2014 when sanctions hit. It was also the oil price collapsed at the same time. So this year in Q2, we had that double whammy of oil price collapse and COVID. Of course, one was linked with the other. The Russia decline was less bad than had been predicted. The recovery is faster. We are simply looking at going back to where we were, kind of pre-COVID, and should be there, all else being equal, by next spring. That still only puts us back to where we were. It does not in any way imply that Russia's kind of on a more robust, stronger path. That is yet to be seen, and we'll talk about national projects, the National Economic Recovery Plan, and how effective these will be. These are the measures that have to work for the economy to move forward and to start building on the growth. So we're really just talking about how the economy has survived the crisis and how it looks right now. So here's a graph just to show that. This is the leading indicator. It's a good proxy for GDP. And you can see the last data we have is for July, how the decline is becoming less. So it's still negative, of course, but the decline is becoming less. The August numbers should be near as damn it break even, I would have thought. And I explained that it's to do with the oil production. Just briefly, one of the reasons why the April and May, well, May particularly number was bad, was because of Russia's participation in the OPEC Plus agreement. So as part of that agreement, Russia agreed to cut oil production from slightly over 11 million barrels a day to 8.5. So a really big hit on production, and of course a big hit on exports. So on comparison, therefore, that decline feeds into the industrial production number, feeds into GDP, and that really had an enormous impact. But the part of the OPEC Plus agreement is that Russia can start to add back. In other words, the production cuts will start to ease. And they did that from the 1st of August. So higher production numbers in August. There was a higher oil price in August, and that will help the numbers. So we could therefore expect a much better number in August. That number will come out next Friday, so in a week's time, tomorrow week, Wednesday, Friday week. And therefore, again, it'll add to that sense of recovery, and you'll definitely see a bit more optimism and some more statements probably from President Putin, again, confirming that the worst is over. And in that sense, he is right. So here I just thrown up the factors which have contributed to that less bad economy. Oil price recovered faster. Again, I'll talk about that separately. Low interest rates have certainly helped. Not the huge decisive factor, but reduced, obviously, debt service costs, helped companies. The weak ruble, double-edged sword. Again, we can talk about that separately in slides. But do remember that the weak ruble is not all bad. It's, again, we tend to condition ourselves from developed economies like the UK, where weak sterling is never a good thing. If any of you ever remember, yes, Minister, that was a constant running joke. Whenever something would happen, they would always finish off with, and today sterling took another hit. But in emerging markets, it's not such a bad thing. Yes, it affects the inflow of investment and it makes the investment case less predictable, but it is a very positive factor when you're trying to create a more competitive economy, reduce imports, boost domestic, and particularly with regard to exports, which we know, and the macro advisory, my colleague Mike Wynne has written a lot about this, about government plans and efforts to try and attract more investment into export-orientated industries. And of course, agriculture and food, very much top of that list, and the agriculture sector has been one of the strongest performing sectors of the economy this year, up 4% year on year in July. And according to the ministry and ministry agencies linked to the ministry, Russia should have the second largest volume harvest, grain harvest this year, 2017 being the record, but it'll be very close to it this year. And again, the weak ruble helps those sectors become more competitive and to grow. So again, not always a bad thing. And we can, of course, with COVID-19, it's now level off. And of course, a lot more confidence about the vaccine, etc. And you can see that the confidence numbers as well. We are waiting for the National Economic Recovery Plan to come, but the one to say there, it is affordable. And that I'm constantly saying this to people and to journalists and others when they ask about how Russia is doing. in this crisis. This is a huge difference this time round. This is my fourth crisis since arriving in early '98. This time round, you do not have the sense of panic is too strong a word, but certainly the urgency or concern because Russia has money this time. It can afford to pay for programs. It's really now just focused on what are the more effective programs, what's the best way to use the money. Whereas in previous crises, it was all about debt management, repaying external debt as the ruble weakened, and trying to manage the budget. That really isn't a concern this time, and it's one of the differences. We'll have to see, of course, how it plays out, and this time next year, I guess we'll be able to do that only, but at least it's a more positive backdrop, which again adds to that sense of calm that you see in Russia relative to other countries, and of course in complete contrast to the headlines about Russia that you see with relation to Navalny, Belarus, and sanctions. So the oil effect, again, just to graph, which shows that this is the industrial production number. Again, it is the OPEC plus agreement, so it's positive, it's negative. Russia has fully complied with the OPEC plus agreement from almost day one, which it's never done in the past, which again gives you confidence that that relationship with OPEC plus with Saudi is solid. And that meeting is coming up next week, which will review the deal, and one assumes that they will recommit to the deal, both sides. That should help the oil price recover, which at least will provide some support for the ruble as well. But it has had that temporary effect during May and June in particular, July to some extent, but it should get better from August. Recovery faster, I mentioned agriculture, again, a strong beneficiary of the, not just the current ruble, but the level of investment and the other kind of support programs that the government has put in place for the agriculture sector. Of course, the 2014 sanctions have also helped creating kind of more of a need for investment in food in Russia. But the sector really stands out as having kind of grasped the opportunity and continuing to grow export markets. And we should certainly see a lot more of that. And we are micro-advisory seeing a lot more companies looking at agriculture, foreign companies, food processing industry, looking at Russia, seeing what's going on, and generally are looking at how they should participate in that rather than ignoring it. The construction, at least it's leveled off. The housing sector, of course, has been very poor, but this is one I would expect to recover quite strongly through the winter and next year, because a lot of the National Economic Recovery Plan on the infrastructure side is very focused on construction and affordable housing and big ticket infrastructure projects. So I think construction is pretty much near the end of kind of this poor phase that it's been in, and definitely looking better. So what have I done here? Okay, business confidence, again, just to reinforce the message before we get into the kind of more difficult areas, but reinforcing that message that I started off with, which is this kind of recovery is being better and it's been faster. And here you have the PMI, the market PMI indicators, manufacturing on the left, services on the right. These are better, more useful to look at than the Rostat number. The Rostat confidence numbers are too narrow. The Rostat numbers survey is done with big industries, and you could say almost legacy Soviet industries. So the big state companies, the big employers, they do not capture, for example, Yandex or kind of online or e-commerce or some newer industries, whereas the market numbers do. Therefore, they're more useful. You can see clearly the big drop in April as everything locked down, the recovery since. Just to remind you, a reading above 50 indicates expansion across on the industry. It means that managers and owners are expecting recovery and are planning for recovery. Anything below 50 means that they're expecting contraction and are planning for it. So you see manufacturing is above 50 for the first time since April of last year, and the services number is close to 60, which it hasn't been for many years. So again, some of that is the recovery from the depths of April, but nevertheless extremely positive. So again, it feeds that optimism that we are at least pulling away from the worst part. Same with the consumer. Took a big hit in April, minus 23%. Obviously, if you were in some durable goods areas, such as vehicle sales, it was even worse. But again, same thing, you can see recovery. And the graph on the right kind of explains that to some extent. Real wages only dipped briefly. We are seeing that kind of recovery in real wages. Now, real disposable incomes, which is a huge priority for Putin, negative again this year, about 5 or 6%. But this is an enormous target for government for next year. So again, when you look at sectors like consumer, and I mentioned construction earlier, they have kind of been in the wars to some extent this year. They've been very much at the forefront of the decline. But they are big targets for the government in terms of recovery. They are big targets for the National Economic Recovery Plan. There will be a lot of government support to try and raise disposable incomes. Putin has promised that for people. That should be good for consumer sectors. There's also a lot of money going into, say, construction sectors and housing. It's good politics, it's good social policy, and it's good economic policy. So again, I think if you're in those sectors and really suffering the decline this year, next year it does look a whole lot better coming into the winter because of government supports that are expected, and they are political as much as economic considerations. Durable goods, I mentioned, was vehicle sales. Well, you can see, I'm afraid it's a read it and weep type of graphs here, aren't they, if you're in that business compared to what was expected. We were back in 2008. But again, it's just the only reason to put it up there, not to annoy people, but simply just to show that it is a sector that's recovering. Spare parts, of course, is one that's benefiting enormously from the fact that people are keeping their cars longer. So there's, again, silver linings. But it is a sector that's not been destroyed. It's struggling, but it is kind of moving back in the right direction. On the COVID side, again, we all see the daily news. So just to put it up there, for reference, leveling off, you're starting to see spikes again, unfortunately, in some European countries. Even today, you saw the UK government putting more restrictions in terms of number of people. They're fearful of a spike. Again, no indications of that in Russia at this stage. And of course, the news on Sputnik 5 vaccine has generally been positive. You will have read that the Lancet, which is a reputable medical journal, wrote a very favorable piece about the vaccine and about the success rate in the vaccine so far, but of course did warn that it needs to be broadened out into a much bigger sample, which is now starting. But you could definitely say, so far so good, looking optimistic. On the monetary side, this is also positive. Don't worry, I'm nearly the end of all the positives. On the positive side here, you can see that the rate, down to the post-Soviet low. They just recently, though, Governor Nabulina did sound a bit more hawkish. She certainly sounded as if she was a little bit more nervous about this low rate. Inflation has been moving up a little bit, as you see from the middle graph, 3.6%, which kind of contradicts what Putin said. A few weeks ago, he said that inflation is at 3.4% and will remain at 3.4%. Half an hour later, the revised number came out for August with 3.6. But there you go. I mean, it's not bad. It's well below the 4% that the central bank said that they want to avoid. So that should mean that they will be able to keep this low rate for quite some time. There is still a suggestion that they might cut it again to 4% by another 25 basis points. The next meeting is on Friday week. They may cut it then, but Governor Nabulina was quite hawkish last week, and she was talking about a neutral rate getting back to 5 to 6% when conditions allow. I guess that's at least 12 months away. So we are near the bottom of this rate cut. Now, of course, we're waiting to see, will the central bank be successful in pressing the banks to cut their margins and to cut particularly the lending rates to SMEs, unsecured lending to households. Generally, the rate that they charge to end users has been a lot higher than central bank rate, and the central bank has been targeting that. The central bank also said they're now going back to their bank license review program. That was suspended this year, so there haven't been any bank closures since March. Rating agency RA said that they expect about 20 banks to lose their licenses between now and the end of the year. But there's no question marks over any of the big banks, at least that we're aware of at this stage. So it should be just kind of back to normal rather than anything that's a red flag. Okay, so getting into it, the ruble. I say it's good. It's a positive, negative. As Alf mentioned, the government has been consistent in saying that they prefer the ruble at 65 against the dollar and for it to be as stable in that rate as best they can. And that's completely blown up this year. The reason for that is because of sanctions concerns, which started really late June. If you recall, there was all that controversy over the allegations that Russia was funding Taliban to shoot US service personnel, so-called bounty gates that led to a frenzy in Washington just before the July 4th weekend. There was a lot of talk about, again, sanctions from hell. That really impacted the ruble. And there's been a lot more discussion about sanctions from the US almost since then, and more recently, of course, in the back of Navalny and even Belarus. And that means that the oil price has gone up steadily since May, since the start of OPEC plus, but the ruble has not, whereas you would have expected the ruble to have strengthened with oil. Now, the correlation with oil is a lot weaker than it used to be, but what we've seen, whenever you get a strong move in the oil price, whether it's sharply up or sharply down, the ruble tends to go with it. And that should have happened this summer, except it didn't because of the sanctions concerns. And that's kind of the trap we're now in, is that there are current concerns about the more sanctions. They seem to be fading again. The oil price is a little bit wobbly currently, and the ruble kind of reflects that, as I've said, 76 against the dollar. And of course, we know that the central bank looks at the dollar rate and everything else is by default. That obviously means 100 against the sterling. But right now, that's what the graph is showing you, is that had we not had those sanctions concerns, then the oil price rally through the summer would have brought the ruble stronger as well. It didn't, so we haven't. And in terms of put together this table looking at where the positives and the negatives are, and clearly it's a mixture. The interest rates also being, looking at that, politics have clearly been mainly negative, although one or two are now easing. The interest rates also being a negative for the ruble because, of course, as you cut the interest rate, that hits the rate available on ruble deposits or on ruble bonds, and therefore foreign investors become less interested in ruble assets because they are taking, as far as they can see, they're taking a risk on Russia, and they want to be paid for that with a higher interest rate. So cutting the interest rate is good for the economy, but it's bad for kind of traders or for attracting investment. The economy is turning more positive. So again, that's something that should help the ruble. The trade, this is also a big one in terms of technical. The big decline in the oil exports, as I mentioned, because of OPEC plus, and then the weaker price, means that exports have been down a lot in the first half. That means less foreign earnings have been coming into the country, less money has been looking to convert into rubles, therefore less, kind of less demand for rubles. And that's a big technical factor. It's a lot of money. And that is also now improving. So the OPEC plus agreement allows for higher export volumes. We're seeing a higher average oil price, but also we're seeing an increase in exports in areas like agriculture, which will be strong in the second half, and other areas. So that technical factor will certainly support the ruble in the second half of the year, or the oil price with that. Travel, well, that's good, bad actually. It's obviously there's been less demand for foreign money as people have not been able to travel outside the country, except to Turkey, of course, but generally not, and fewer people, of course, almost nobody coming in looking to buy rubles. So it's a mixture, but essentially what it's saying to you is this explains why the ruble has been weak since May when it should have been stronger, and with the proviso that we really don't know what's going to happen with sanctions, but if that eases, then everything else is turning more positive. So it's not a case, I'm not a pessimist about the ruble outlook. We, for now, are keeping our End year ruble forecast at 70. That looks certainly off at this point, but it wouldn't take much to get the ruble back to 70 against the dollar. If sanctions concerns were to ease, which they tend to, and the oil price stays in the mid 40s, which again looks more likely than not, then you will definitely get more positive pressures on the ruble in Q4 rather than a pileup of negatives. So I'm happy enough to stick with my 70, even though it looks like it's an offside right now. But you could, looking at, clearly it's something we've got to watch closely on a day-to-day basis. But short term, of course, could go anywhere. But I'm still happy with the 70 for the end of the year, based on what we're looking at. The sanctions and politics are clearly the ones that could change that, but everything else looks more positive for the ruble. In terms of oil, of course, will be a big one on that. We have seen the oil price weaken in the last few days. It was 45 or 46 last week. I think it dipped below 39 or 40. It's back up above 40 today. It's had a strong rally. That's 80% since May. There are traders who are booking in their profits. There's been a big sell-off in the tech sector in the US because of the strong rise they've had. So again, nothing ever goes up in a straight line, as we all know, to trot out the cliches. So there is profit taking. There's a certain amount of nervousness about COVID. But generally, so long as the OPEC deal holds and the demand side remains even where it is right now, plus the fact that US shale producers, the high-cost producers, are under pressure. Quite a number have gone bankrupt. They're not easily able to get quite new money to go back into business. So again, it tends to suggest that we will see a higher oil price in Q4 rather than a weaker, unless you think there's going to be a major disaster on COVID. Then you're definitely looking at a higher price coming into Q4, and we're not the only ones saying that. Other agencies pretty much saying the same thing. If these factors, demand, US shale, and the OPEC deal holds, we will get a higher price. So where that higher price is, but it's certainly not going to be too high, but drifting up, I think, into the end of the year is what we're looking at. And that's all you need for kind of the ruble to recover, all that's been equal with sanctions. Okay, on the development goals, and clearly this is kind of moving from the short term, just kind of in terms of stability, as to what kind of drives the story forward, what creates more opportunity for investors. Well, the national projects, still it's where it's at. That has been kind of sidelined in the last few months. We know it's under review. And we are told that in early October, we should get a more definitive guide to what the priorities are with regard to national projects. And then from that, we'll see where the spending is and therefore where the opportunities are. So as I mentioned earlier several times, construction, housing, areas that boost income, etc. It's quite clear that they will all remain as priorities. But in terms of other areas, we have to wait and see. We do know the national development goals. Remember, this was kind of Putin's re-election manifesto, I suppose, at the time. That's now become more realistic and less vague. So, things like Russia want to be a top 5 global economy, productivity, these things were all terribly vague. They've been quietly dropped off the list. And the focus now is on, good social policy, good economic policy, good political policy, like public health, job creation. But in addition, infrastructure and digitalization remains a very key part of it. Improving technology, digitalization. Again, a lot of discussion about this. Equally, a lot of frustration because what we have seen in the last year, a couple of years, is that the government simply wasn't ready for it. It adopted digitalization, put a big budget, 25 billion, in terms of the first phase development, and then started scratching their heads. Like it's as if nobody was ready for this. They don't have the skill sets or don't have the actual detailed plan, and that's being developed. So a very slow start. There's been lots of personnel changes in the different ministries linked to this. One assumes, therefore, that they're getting their act together kind of more slowly. So it's very much front and center, and they understand that digitalization needs to happen for the economy to become more modern and to move forward, and that will create opportunities for investors, existing as well as new. But again, question mark over how quickly and how effective it'll be put in place. The only positive thing you can say is that, well, look, they've been trying this for long enough. There is evidence that it's starting to work. It might still be slow, but it's moving in the right direction, and the allocation has not changed. You know, in terms of national projects, this is just a reminder of what there was. We have not yet had this table revised as to what remains on it, what the targets. To remind you, this was the spending program that was supposed to be completely finished by 2024. That is not going to happen. It never was, but now at least they're being more honest about it, saying that it's more likely to run up to 2030, but there will be changes as well. So again, we'll come back to this in October. No doubt we'll be writing and talking about this a lot once it's revised, because this will be a core part of the investment story for Russia for the next several years. The economic recovery plan, again, it hasn't kicked in yet, even though it was adopted at the start of 1st of July. But do bear in mind, phase one, which is where we're in right now from July 1st to the end of September, is an adoption period. In other words, more talking and kind of more debating and more, I suppose, haggling over resources. This really is supposed to start in terms of money being allocated and spending from the 1st of October. We are being told by different ministries and by the administration that that still is going to happen. So from the 1st of October, we should start to see more proactive position from government, and more money being available for the targeted areas. Again, which is income growth, it's technology, it's infrastructure, and it will be also areas like number 5 there, which really is a big deal when we talk to various people in government. This comes up a lot, trying to attract manufacturers and investors into areas that can expand Russian exports and can diversify exports away from what has been traditionally extractive industries and hydrocarbons. And we heard this from Peshkov last week. He was asked a question and he did say the move away from hydrocarbons is happening too slowly. But you know, the government is committed to try and accelerate that program. So it's on the agenda. It's just like everything else in Russia, it takes a lot longer. But that's an area. And what it means is that a company that manufactures a product that can be manufactured in Russia is very likely to be able to cut a good deal with the regional administration or with the ministry. You basically say, look, you know, we've got a factory elsewhere. We're thinking of building one in Russia. What can you do for us? You're going to get a good deal. So again, a lot more of this I would expect over the next year. Government finances, just quickly on that, I was saying earlier, the difference this time around, or one of the differences, there is money in the bank. And interestingly, look, there is no appetite to spend the money in the savings. We've heard this actually interestingly from a few people in the administration, is that Putin has said he does not want the savings to be used to fund the programs. He prefers to see borrowings against the savings. And the argument is that you are then under more pressure to reduce those borrowings later. Whereas if you eat into your reserves, you don't have the same pressure to rebuild the reserves. Whereas borrowing has to be rolled over or it has to be repaid. Okay, well, basic argument, but that's what they're doing. And Alexei Kudrin, the head of the audit chamber, said the same thing last week. He said that borrowing will be over 50 billion this year. But he also, of course, said that the total debt to GDP, government debt to GDP, which includes domestic as well as external debt, will remain well below 15%. And that means it's one of the lowest in the world. I think the 5th lowest in the world. So again, a completely different set of circumstances than when you're talking about other countries and the situation they're in. So Russia does not have to borrow a huge amount of money to cover what it needs to do or wants to do, and it really doesn't even make a difference on the balance sheet. This is still our base case scenarios, which I'm happy with, I have to say. GDP 3.5, as you saw, the economy minister said that he has revised his forecasts and submitted them to government. He was on a -5% this year, and he's coming down to -3.8 or 3.9. It's fine, 3.5. It could even be 3 if the oil price stays high, so we're happy with that. Do bear in mind, of course, that there is a kind of mathematical effect on next year. So it's not that we're being pessimistic on next year, because the IMF and others have maybe 3.5 for next year. It's simply that if you don't go down too much this year, you're not going to bounce much next year. The IMF have got -5 or -6, and therefore for this year, and therefore 3% to 3.5 next year. That's just the bounce effect. So we're 3.5 this year, 2.5 next year. 2.5 is that kind of sustainable level that we were looking at pre-COVID. Clearly, it needs to be more like 4 for the economy to really change, but that seems several years away. Elsewhere, there's nothing. We are certainly more. We have improved our retail sales forecast. We were looking for -6. That looks better. You see very strong growth in e-commerce, online, some other areas. Budget balance not too far off. Okay, this is the oil price average. We are a little bit higher, perhaps, than others, but again, I'm encouraged with what's happened in the first half and where we're at. And that supports the ruble dollar forecast back at 70. So clearly this is one to watch. And if you put a gun to my head and say, are you 100% sure about that? Then clearly I'm not. But this is what I'm expecting, but we are watching it closely. And frankly, it wouldn't surprise me if we had to change this to something a little bit more negative later on. But right now I'm not expecting that. Our euro forecast is simply based on the rate in the market between the euro and the dollar. And I guess that will depend a lot on what happens with the election season and who wins and how markets react to that. On sanctions, and again, sorry, and we leave plenty of time for Q&A. Just on that, it's an ever-present threat. To say it's been the big drag in the ruble since early summer. We've had another resurgence in the back of the Navalny story. That's by no means done. Although it does appear as if whatever sanctions come from Europe are more likely to be targeted against individuals. So in other words, it could be an expansion of the Magnitsky Act list. We're not expecting sanctions against Russia as such. So that fear seems to have eased considerably, both on the US side and on the European side, that there simply isn't the appetite for it. I think next year, it obviously depends who wins, but it's not going to help Russia, whether it's Trump Mark II or Biden Mark I. Congress is still very, very anti-Russia. We'll be looking for opportunities to hit Russia with more sanctions, and that will be a background threat that we will live with for some time, regardless of the election. It's simply a question of hoping there won't be catalysts to bring that forward. But you can see, as we saw earlier, it's never too far away when it comes to Congress. So that's, I think, but there's, the good news at least is on the Russian side, they're just dealing with it. There is no sense of Russia looking to counter with new sanctions or to make life difficult for foreign investors in Russia or to in any way exclude foreign companies. We can see what's happening in procurement. It's more easing the process for foreign companies to participate in state procurements rather than slamming the door. Clearly, localization is still a big issue. Want the foreign company to localize, but the ownership doesn't matter. So we have to, with sanctions risk, we simply have to wait and see what happens. We know it's there. And then, you know, these are the themes that we've been covering a lot this year, essentially based on what we are, the questions we are getting from our clients or from our potential clients, asking about these areas, kind of see opportunities of maybe in terms of what the government is talking about, renewable energy, the environment, obviously big areas, export industries, ESG theme. This is also something we've now picked up on, initiated on. My colleague Mike Wynn also writing a lot about this as a kind of an emerging strong theme. No doubt the E and the S are very much kind of on the table. You know, obviously after the Norilsk spill this year, after last year's forest fires, you know, the environment is very much, you know, on the table. And S, on the social issues, also being accelerated in importance because of COVID and the way companies deal with their employees. And of course, this will be a very, very big issue, you know, as we come into the latter stages of Putin's at least current term, you know, and how companies are seen to be treating their employees. And it would certainly not be good business for any company to be seen to be laying off large numbers of people or treating their employees badly. So S is very much. G is still a lag, of course, in Russia. Governance, it's not on the table. I don't really have anything positive to say in terms of, you know, events or trends. It's still very slow. It's a cultural thing, but we'll have to wait and see what happens there. But right now, it's definitely the E and the S rather than the G when it comes to ESG. But it is a big theme, and you see a lot of companies like Lukoil and others, you know, very much kind of adopting and reporting on their ESG compliance. And you know, when markets return to some sort of normality, you will definitely see big investment funds treating this as one of the key investment criteria, particularly sovereign wealth funds and some of the big long-term investment funds around the world. You know, they are very focused on ESG, and they want to have portfolios that they can report to their clients that are compliant, and therefore they'll be demanding that from companies, and companies that don't comply will suddenly will find that their valuation will be affected, and then there will be a gap. All else being equal, there will be a gap with the more compliant companies. So in terms of summary then, just to finish off before we go to Q&A, say the good news, economy is pulling out of the slump nicely and steadily. There are no red flags as such. We are expecting to see revised forecasts from the Economy Ministry. We know they've been submitted to government. They will be part of the revised budget. So a lot of this is to come late month or early October with the revisions to the national projects and other government plans to try and move the economy forward. You know, again, another piece of good news is the more comfortable financial position, which, as I mentioned, it seems like Putin is pushing more for extra funding to be covered with borrowings rather than eating into reserves. He likes to go to bed at night, obviously counting the money. He wants to see it there. But again, that's completely different than we've had from other situations. And it means that if there is another problem, and if the government needs to put more money into the economy, either by way of tax breaks or extra funding, direct contributions, it is there. They don't have that pressure. Ruble is a double-edged sword. Clearly, this is an enormous problem for investment predictability, for inward investment, but it is a positive factor for budget management, for cost management, for exporters, and of course for competitiveness of export companies as well as domestic industries. But still, you know, from what we hear from talking to the finance ministry people, they'd still prefer the ruble to get back to 65 or 66 rather than being in the high 70s. But you know, that certainly could change. And then other sectors we're looking at, say, consumer sectors, construction sectors, those related to national projects, and some of the new areas, renewables and environmental focused. Again, these are the areas that we will be looking to perform much better next year. And then the continuing red flag, what is a relatively calm situation in Russia, once you cross the border, Navalny, Belarus, risks, US elections coming up in November, all hogging the headlines, all negative factors when it comes to attracting investments. So I think, again, looking for no reasonable basis to assume any increase in foreign investment until we get clear of all these issues. In the meantime, it'll be more domestic focused. So with that, Alf, I will stop sharing and hand it back to you, and happy to take any questions.
Great. Chris, thank you very much for fascinating insight as always. We've got about 15 minutes for Q&A. Before we go to the floor, so to speak, we have one on the chat room. You'll be able to read it yourself, but I'll read it out. It's from Philip Owen, and he asked, do you believe that there will be an increase in direct investments by foreign institutions in the Russian private sector, e.g. constructing new export infrastructure, now that the ruble is so low?
The short answer is no. I'm not expecting any increase in investment, particularly from foreign companies. Yeah, investment from Russian companies, of course, particularly the state companies, they will be, as always, encouraged to play their part and participate in government programs. But those who have discretion, particularly foreign companies, no. I mean, every box is kind of negative. The ruble is unpredictable, it's weak. And that's a big factor, and it's always a big factor when it comes to investment flows. But equally, you have, of course, the still very negative political situation, again, with regard to Russia. So, I mean, we have these conversations all the time with companies that, you know, when they've done their due diligence about investment opportunities in Russia, and generally are encouraged by what they see and can see that there's an opportunity for them and for their business, you know, over the next several years in Russia, but they still get an absolute no from the board or from senior management, because companies do not want the reputational risk. They do not want the uncertainty of Russia, and the door remains firmly shut. And I don't see that changing anytime soon. Maybe this time next year, we will have a different set of circumstances, but I would think between now and, say, you know, next summer, the legacy of what we have today, the uncertainties that we have everywhere, I am not expecting any significant increase by foreign investors, and by private Russian investors equally. I would think that would be very slow. The investment will come either from the state sources itself or from state companies that are, you know, obviously directed by the state to invest. But that's it. I don't see anything else. Well, we're not seeing any capital outflows. Sorry, there has been a capital outflow, but it's almost directly, it is almost all caused by Russian banks repaying foreign obligations, and the central bank confirmed that last week. So the capital outflow that we've seen in Q2 was almost entirely bank money paying down external debt. There is no evidence of, you know, so-called suitcase cash. It's all gone anyway. Or foreign companies taking their money out because they haven't brought much in for the last few years. So that also adds to stability. And so again, you don't want to overemphasize the stability as a positive. It is short term, but it's clearly a negative longer term. But nevertheless, it is what it is, and I don't expect it to change. It's relatively stable. We're not expecting inflows. We're not expecting outflows. The money will come from the state.
Great.
Okay.
Very clear, Chris. Thank you very much for that. We'll hand over now to Trevor Barton, who'd like to ask you a question directly. Trevor, I've unmuted you, so I think I've unmuted you. Yes.
No, you haven't.
I'm trying. You unmute yourself, Trevor. Sorry, it didn't work.
I think I'm unmuted now.
Yes, you are.
Okay, Chris, hi. Thanks very much. As usual, very thorough and useful summary of everything. I just wondered if you were able to say a few words about the hospitality sector. I have a client who is interested, perhaps in a counter-cyclical way, in the hospitality industry in Russia, and not being on the ground myself, I haven't had an opportunity recently to see how full the hotels are and things like that. Either from a just being on the ground point of view perspective, or on a broader economic way. I mean, how is the hospitality sector looking? Is it as bad as one imagines it would be, given what I think is perceived as less foreign business people going and staying in hotels in Russia, etc., etc., or are there perhaps some signs of recovery?
Well, as always, it's a conditional answer, I'm afraid, when it comes to Russia. So when you mentioned hotels, I think that's still a poor picture. Clearly the level of travel, anybody who's tried to get into Russia who doesn't have the right paperwork will know that. So hotels are still struggling, and the occupancy rates are very low. But when you walk around the streets of Moscow, there is a vibrancy out there. As you know, this time of the year, towards the end of summer, the outdoor patios are still open. And, walking down kind of the main streets in central Moscow, I'm sure in other big cities as well, there's still plenty of people out and about. So it is a bit disconnected. If you're talking about just a situation over the next 6 months, I would say there's very little reason to be optimistic. I would think that, in general, the hospitality sector will continue to struggle through this, and will probably be almost the last segment of the economy to recover when it does. And I think realistically, you're looking at, you know, next summer before you really could say that. But if you're looking at, say, longer term, should you be now looking to maybe take advantage of perhaps a cheaper entry point? And as I mentioned, if it's a business that's big enough that can, you know, attract some incentives from the government or from regional administrations, then I'd say, yeah, you should, because, you know, the consumer economy, the service economy, still has a long way to develop in Russia compared to other countries. When you look at consumption habits, you know, and spending in different areas, Russia still kind of is moving slowly up. You know, it's well behind developed economies. There's plenty of opportunities. The only thing that we found is in doing projects for companies, it's a mistake for anybody to assume that what happened anywhere else will be replicated in Russia. You know, Russian consumers have proven to be a lot more sophisticated and a lot better informed. So, for example, if you were selling fast foods, a lot of fast food developers have been disappointed that they've not been able to sell the same volume in Russia per population or per capita than anywhere else, because Russian people moved very quickly on to the kind of more modern kind of consumption that's now maybe in central London or California, etc. So you do have to be careful about what products and services you're bringing in, and clearly the newer the better. What's new elsewhere will be favored in Russia rather than old. But so long term, absolutely, I would think that the Russian consumer economy, the service economy, has got very strong long-term growth potential. This is a good entry point because you can cut deals and you can get, you know, kind of good entry conditions. If you're looking to make money over the next 12 months, I would say no. You're probably not going to do
Thank you.
Thank you very much, Chris, as always. I'd like to go to, let's have a look, Stuart Lawson now, please. He'll unmute himself.
Yeah, hi, Chris, good as always. Trevor, just to give you an idea, I'm actually sitting in a hotel in central Moscow that has 33% occupancy, and the general manager's just told me that is superb performance, that most of the others are at 20 to 10%. So I just, just endorse that. Chris, for you, we've been talking about productivity and the need in the past, the IMF, and I think you have talked about productivity and the need for foreign investment to help that. But I have to say that it also seems to me that the whole venture capital industry has taken a couple of knocks, obviously one with the Calvi case that keeps coming up and should keep coming up, and the second being that the decriminalization legislation that was supposed to get passed in the summer didn't, and therefore state involvement in venture capital seems to still be problematic, as is evidenced by the RBCC situation. How bad? I'm sorry to rain on your parade, but I mean, how negative is that in terms of economic development? Do you think?
Yes, although I have to say, Stuart, whenever I'm making a presentation, one of the reasons why I'm constantly kind of saying we're being pragmatic rather than optimistic is because you've got your voice is behind my ear every single time about reminding me of realities, and this is okay. And this is one of them. And you're right. I didn't touch on venture capital, and clearly for an economy that's going to grow and expand as the government has said it wants to, and as Russia needs to, and it's a whole different discussion about what might happen at the back end of this decade if Russia does not pull out of this kind of rut. And 2 to 3% is a rut. It's not quite recession, but it's stuck. It's not enough to keep pace with the changing population and expectations and demands of the population. For an economy like Russia, that needs to be 4 to 4.5%. And say if it's not delivered on, we get into the back end of this decade, then you could have a whole different set of kind of social and political issues. But put that to one side. There absolutely is no evidence of any interest in venture investing in Russia. And it's a step beyond the answer I gave to Philip, you know, about just the general reluctance that we see from companies that can make money here, that they're just reluctant for various reasons. But venture, you know, that's a different world altogether. That there is zero incentive. Add the, you know, the political perception, the ruble, and then you have the Calvi case, and you're quite right. This Calvi case, or the Behrings-Vostok case, because it's not just, of course, Mike Calvi, the other people as well. You know, that's a huge story in the venture capital world, and they all know it. And until that's resolved, you're not going to get a single dollar of investment into kind of innovative technology. Yes, I mean, the exception, of course, would be online and e-commerce, and that's an area that's booming in Russia, as it is in lots of other countries. So, you know, when Yandex talk about driverless cars and, you know, obviously improved delivery systems and fintech systems and, you know, logistics, etc. Yes, you can talk about that. That's not a contradiction to what we're saying about technology and innovation. That's kind of more just the, you know, the expansion and the modernization of consumerism. But in terms of technology and the sort of innovation you need and investment into these new sectors that can create new growth, that's as big a problem as the kind of lack of support for SMEs and for entrepreneurs who are Russian based. And I'm afraid I don't have anything positive to add to that. I absolutely agree with you. I think that, you know, it is an enormous problem that the government really is not doing anything serious enough about to deal with. They talk about it, but they do nothing. As you said, even the legislation, decriminalization, hasn't even been passed. So for now, let's say, kind of want to be slightly optimistic, we say, well, they're distracted with, you know, bigger issues, which clearly they are. But, you know, this is exactly the sort of area that needs to be addressed, you know, next year, when we hopefully get clear of the more pressing and urgent or dangerous issues, but really addressing, you know, the technology and innovation and attracting venture capital, as well as trying to boost SMEs and entrepreneurs. Those are the key areas. Otherwise, you're not going to get the growth at the back end of this decade that the country will need. We'll stay in that 2 to 3%. So yeah, that's a problem, and no question about it.
Great. Chris, thank you very much. Thank you for that question, Stuart. And just as a comment, I see they have amended the law slightly to curtail how the authorities can go after businesses in the courts. But obviously, I mean, Boris Titov himself said they haven't gone far enough yet, and that's obviously yet to be resolved. Ladies and gentlemen, that's all we have time for, I'm afraid. Thank you very much to Chris, as always, for a superb update on the economy. And of course, thanks to everyone for joining us. I'd just like to make a couple of announcements. I hope you'll join us next Wednesday for our next webinar, when our guest will be the Paminayu Consultancy, and they will be talking at 1 p.m. Moscow time and looking at how best to support employees returning to work. And then there'll be a slight pause before this 2nd of October, when we are running the Russia Talk online forum. That will in many ways be replacing the physical event. It will be a full day of content. We have an absolutely great lineup. We've talked about ESG. That will be one of the panels. Another panel will be future of work. A third will be looking at the national projects and infrastructure. And the fourth, vaccines. All the information is on the website. All members will have received an email about it. That will be continually being updated as more speakers confirm. But the program is looking great. Chris will be doing the introduction. He'll be doing an economic, again, update, but really bringing the 4 panels, putting the 4 panels into context. And I hope you'll all put that in your diary and join us on the 2nd. But anyways, thank you very much again, Chris. Thanks to everyone for joining us. Have a good rest of the day and look forward to seeing you next Wednesday, hopefully. Thank you very much.
Thank you, Alf.
Thanks, Chris. Bye.